It's these USA cheers. I have
Absolutely.
Michael Reinking here joining me in the studio. He is Senior Market Strategist for the NYSE. Michael, welcome.
Good morning. Thanks for having me. It's an exciting day.
Yeah, it's certainly an exciting day, to say the least. So we're looking at some green arrows on the screen. Dow maybe regaining some of yesterday's losses,
Yes.
up about 120 points right now. S&P 500 up about 0.2% in the early going, inching back closer to those all-time highs. Let's talk about what could, or what is driving today's action. Bank earnings, we have inflation data. Let's start with bank earnings because we didn't really get into those at all yet in the show. It seems like, on the whole, big banks coming in better than expected.
Yeah, the numbers have been pretty solid. You've seen, there was a little bit of a question around some of the net interest income numbers yesterday, which weighed on some of the stocks. But you've seen very strong trading data, especially in fixed income and commodities markets. Equity trading has been solid as well. The commentary around investment banking and the back half of the year has also been solid. And then in terms of the consumer, which is kind of all encompassing, right? The general commentary is, but the consumer continues to spend. There is some bifurcation at the income levels, which is something we've been kind of seeing throughout this year. And nobody's kind of raising any sort of red flags around credit. So the numbers are pretty strong. The stock reactions have been muted. You've seen some of the stocks trading lower, but you have to keep in mind, if you look at companies like a JP Morgan and Goldman Sachs, they were up 20% year to date coming into these numbers, right? So there was high expectations. We're seeing, yesterday we saw some modest pullbacks. The stocks are rebounding a little bit today. So I wouldn't necessarily read anything too big into that.
Yeah, in terms of the movers this morning, it looks like Morgan Stanley is the big loser on the session so far, down about 3% following its results. Goldman Sachs, Bank of America, both modestly lower as well, but the rest sort of flat at this point. But to your point, they've seen such impressive run-ups so far this year. I think that as you think about earnings season as a catalyst overall, is it a high bar, or do we expect it to be a catalyst that could puch the market higher?
Yeah. I mean, it's interesting because there's kind of a bifurcation, right? So in terms of the numbers, I think the numbers have reset lower with the negative revisions that we'd seen kind of throughout kind of the beginning of the quarter. That sort of bottomed out in kind of that April-May time period, and you've seen kind of earnings holding pretty solid. The bigger question is, so companies will likely beat those numbers. The bigger question is the price action that we've seen, right? And so that makes the bar a little bit higher in terms of continuing to move at this point, kind of after the rally we've seen.
And then in terms of inflation, another key focus of the market, especially this week. We had CPI yesterday, we have PPI today. CPI seemed pretty good at first, and then it seems like maybe there was some digging and some realization that those tariffs might be having an impact on certain areas in terms of the things that we buy. Seems like the market sort of forgot about that with PPI today coming in cooler than expected. How big of a concern is inflation, do you think? And does the market have it right? Yeah,
so I think the devil's been in the details, right? So yesterday, the CPI, core CPI came in a little bit hotter. But that was driven. We saw the good side of the equation, which is raised some questions. So if you looked at core goods ex autos, that was up over 0.5%, the hottest reading that we've had since 2021, right? So that was what kind of markets reacted to as the day wore on. Now today, PPI came in better than expected. There was a positive revision to last month, which really offsets that, right? But we saw those same dynamics where you saw goods inflation offset by services, declines in services inflation, primarily coming from the travel side of things. When you get into kind of the conversation around the Federal Reserve, right? The expectation that you're going to see an increase in that goods inflation for a couple months is okay, and I think the Fed's is expecting that and is okay with that. It's after you get past that August-September time period, they don't want to see the continuation of the inflation. So the way kind of inflation is calculated, if it's a one-time increase, that's okay. They can then start on their easing, on the track to easing. If you continue to see it month after month after month, that's where it gets a little more difficult.
Okay, so on the whole today, the news coming in better than expected. S&P 500 less than 1% from all-time highs, though. If you take a look under the hood and see what's beneath the surface, is it as positive as the year-to-date percentages and the percentage off the lows actually implies?
So look, I mean, yesterday in particular, we saw really, really negative breadth. It was pretty historic in terms of the S&P 500 that was around unchanged, but you had 10 to 1 decliners to advancers. Within that index, it was all kind of strength within the tech space. We're starting to see some really speculative behavior over the last couple of weeks when you see stocks moving kind of 20% a day in some of the thematic kind of trades that are out there, rare earths, crypto treasury companies, right? You're seeing really speculative behavior. I think that suggests that the market needs to do a little bit of a reset. If you think about where we are from a seasonal perspective, the first 2 weeks of July tends to be the best 2 weeks of the year historically, right? So we're coming right on the back end of that. This morning we had a VIX futures expiration. Sometimes you start to see a little bit of an expansion of volatility on the back end of that. Friday's options expiration. We're into earnings season, and then you also have the buyback blackout window. We're right in the heart of that as well in earnings season. So seeing a little bit of a retrenchment over the next kind of month and a half wouldn't be terribly surprising.
Okay. All right. Well, of course, keep our eyes on that. Michael Reinking, always appreciate you joining us. Thanks so much.
Thanks for having me.
That's Michael Reinking, Senior Market Strategist for the NYSE.